my name is James Nicholson and welcome to my YouTube channel. On this video, I want to talk about house prices. We've just started 2024, nearly got that wrong there, and already we've got some house price data from the Nationwide today, which is really interesting. They're saying the house price market is stronger than it's been for more than a year. So this is very interesting. I want to unpack this. What are the figures? What do they expect to happen in the market? And much more. So before we jump into this, as always, make sure you subscribe to the channel over there and hit the bell notification. That really helps us. We're so close. Have a look around this video somewhere. You can see how close we are to 20,000 subscribers. Help me get there by smashing that. And while you're here, you guys know what to do. Smash the like button, tickle the like button, do something to the like button. That really helps us with the YouTube algorithm. Every time you do that, more people see this content. So please take a moment to do that now. So, Nationwide. Nationwide have got their data out today, which is interesting because it's not even the end of the month. But they like to get there first. So, you've got Nationwide, and they're saying that this is the strongest growth in house prices for more than 1 year. This is a positive sign, 100%. Now, maybe the market is going to drop this year, but if we can start the year with an increase, that means that the drop won't be so bad for a lot of people, and that's what we want. We don't really want the market to go shooting off this year. We don't want it to crash. What would be better for everyone is that it was a fairly flat market. That would improve affordability because interest rates are likely to go down this year. You'll be likely to get a pay rise, hopefully, in your job at some point this year, at least in line with inflation. So that all improves affordability for people. And it means that people that bought at the peak in 2022 are less likely to go in negative equity. And I think that that's a good thing in my book. So we've started the year strong and we've had 0.7% growth. So nearly 1% growth in January so far, which is really good data. Now, I like to listen to the lenders. I say this every single month, and this is the reason why. The lenders have the crystal ball that nobody else really has. You see, the data that we get from the land registry, the data we get from agents, that's not telling us what's going to happen in the next few months. Nationwide, no. They know what deals they've got on their desk right now. They know the deals and the valuations that have come back on deals that are going to complete by Easter. Not by Christmas, by Easter this year. They know that data. No one else knows that. They know the agreed prices. They know the valuations. There isn't anyone else, apart from lenders, that really has that data. And so we should listen to what they have to say. Yes, they have a bias to keeping the market up. Of course they do. They don't want the market to crash because they could get themselves in a right pickle. But it is worth listening. And they also have to be fairly accurate because no one would take them seriously otherwise. If they said the market's going to stay flat and then it crashed 50%, then no one's going to listen to their analysis in the future. So the Nationwide is saying 0.7% up, and they're saying their average house price for their deals is £257,656, which is pretty good. That's a nice solid number, and that's really positive. So when they did last month's report, they said up to December, the year ending December, that house prices were down 1.8% till December. Now, this growth in the market that we've had this month, and also the fact that we've lost a month. So when they were looking at it, they're looking at the calendar year from January to December. Now they're looking at from February till January, kind of speak. So we lose a month. It's always a rolling 12 months. So the rolling 12 months up or down with them has vastly improved. And they're saying it is still down, but only 0.2%, which is nothing, like absolutely nothing. Now, if you're a property investor and you follow this channel, or you've watched the Fundamentals of Property Investing, our program that we've got for less than 50 quid, hint, you can grab that in the description below. If you're an investor of some sort or you've watched this training, you'll know that you could easily add 0.2% value. With every deal, you should be looking to add a minimum of 10% in value and buying 10% below market value, which would protect you from these kind of price rises or drops or whatever happens in the market. So that's interesting to see. What else are they saying? They're pretty optimistic about this year. They still feel that the market could be turbulent. They feel it could be down a couple of percent, but the stuff they said that we've got to look out for is the rates dropping from the Bank of England, but also they mentioned the Federal Reserve. And so you'll hear me when I talk about the Bank of England when they're going to drop the rates. It really depends on what happens in America first. We follow the Fed. Now, the Federal Reserve have their meeting today. I think it's 7 p.m. So by the time you watch this, it will already be out, the information. And so they are likely to hold, probably did hold, interest rates today. That means when the Bank of England go tomorrow, they're also likely to hold interest rates tomorrow. That's very, very likely that that will happen. Now, what we're looking for in these meetings is I expect that the Federal Reserve will say today, you'll already know, maybe you know already if you're watching this video after it's happened, I expect that they're going to talk about interest rates having peaked and they're going to talk about loosening those interest rates and coming down. They're not going to say directly, we're going to drop the rates next month, but they're going to start talking about the possibility of interest rate drops. That's what you want to look for. Now, tomorrow's meeting with the Bank of England, I don't think you're going to get that. I think the Bank of England are going to be more firm. They're going to say the rates will drop when we've beaten inflation. I think they're not going to give the game away. I think the Americans are more likely to hint at what likely is going to happen. Now, what the Americans are going to be looking at is the jobs data. That's out in America on Friday. The Federal Reserve already have that data. If it seems like they're talking about the fact that rates could drop and it might drop sooner, that means that there's probably bad jobs data coming out of America. If the American jobs data is good this Friday, it means they're likely to keep the rates higher longer just because they can. Right? If suddenly people are losing their jobs and businesses are closing faster and there's a recession on the horizon, then they'll act a little bit quicker, but it'll be interesting. Now, also, what's interesting to see is the Federal Reserve rates. They're looking to potentially drop the rates in March. That's what people think could happen now. But if they don't, there's actually only 5 weeks between the March meeting and the May meeting. So it could easily happen in May as well. And it wouldn't make much of a difference. It's only 5 weeks. But the markets will adapt to that. The swap rates that we can borrow or the banks borrow at will adjust accordingly to what they think is going to happen. And that means that we could see some more mortgage rate drops in the next few weeks. What else is going to happen? What else is happening? This is interesting. This is exactly what I heard from agents as well. I just put an offer in this afternoon on a property, and they're saying that January this year is really busy. They've got record numbers of buyers coming to their market. Now, what that shows is that means that properties may not need to get big discounts in order to sell at this point. I'm not saying they're not going to crash or they're not going to go down. I'm saying at this point, there's been a load of buyers that have been waiting to get in the market. They left in 2023 because interest rates are high. Now they're seeing interest rates drop significantly. I just did a remortgage yesterday that all I could get was a 6% rate a few months ago, and I got 3.99 with the mortgage works, which I was really happy with. Not as good as a new customer, but it was easy, and I did that. So that brings more buyers into the market. That could keep the market propped up that little bit longer. Anyway, that's a good start, I feel. House prices, maybe, yes, they're going to drop this year, but if we start with a little bit of an increase, any drop isn't going to be so bad. Let me know your thoughts on this one. Do comment below. Do check out the fundamentals of property investing. It's 50 quid, guys. It's literally nothing. Go and check that out while it's on a discount at the moment. Do subscribe, hit the bell, smash like, go and check out some more content on my channel, including this video right here.